up, YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And in this video, we're going to be talking all about the RSI indicator. Okay, so for a while now, you guys have been requesting more videos on stock chart indicators and stuff like that. Different things on how to use them, you know, when's the best time to get in and out, how can you use them to make money and everything like that. Great. I've decided to make a few videos dedicated to individual indicators so we can look at them one at a time. And this is going to be great because we can really dive into each one, and then you're going to have time to fully get the ins and outs of each one without, you know, worrying about anything other than just this indicator. So we're going to focus and put all of our attention on this. Okay. But first, if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Yeah, so let's get this video to 2,000 likes. Also, make sure that you subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. And if you're new to options trading and you're stuck on what stocks to trade options on, or even different option strategies that you can do, like long calls and put plays, credit spreads, earning report, option swings, and so much more. There's a lot of things that you can do with options. So there's a service called Tiblio, and they offer amazing stock option picks, and they have a great selection of strategies that you can choose from. So make sure to check them out. Tiblio updates their stock option list literally within every hour on the trading day, and they're gonna have the best stock option picks, and they make it so easy for you. They give you the option prices, they give you the strike prices that you need to pick, and even the best expiration date. So please make sure that you check out Tiblio. I'll make sure to leave a link in the description below. Also, make sure if you are interested in using Tiblio that you use my link for 20% off of your first month. You're welcome. Okay, so let's go ahead and let's get into it. What is the RSI indicator exactly? The RSI, it stands for Relative Strenght Index, but the RSI is definitely one of the most popular indicators that that traders use. So it's an oscillator. So the RSI it's designed to measure a stock's momentum, and that's just how fast and how large was a recent change in a stock's price. The RSI can help us find stock trends, entry and exit signals, and a lot more than that. I won't go into a lot of details on the actual formula for this because it really isn't important to remember. Just know that you're going to have a certain number of parameters or time periods that you'll track the stock's price changes over time. So the normal time period that the RSI comes set for is 14 periods. And that just means that the indicator looks back 14 bars on whatever graph you might be looking at. So it could be the 15-minute, 30-minute, 1 hour, 4 hour, whatever chart that you're looking at, it's going to look back at 14 bars on that. But you can change this to be more or less than that. So you can change your parameters to be more or less than that 14. And I will say that even though 14 is the default setting, that may not be the best setting for your particular trading. Normally, short-term traders, I'm a short-term trader, hello. We're gonna use smaller periods. I personally like the 9-period RSI, and this is just gonna show short-term movements in the market. I've noticed that shorter periods like the 9 and the 10 are more effective for my personal trading because it shows 2 weeks of actual stock trading days. And you know that stocks trade from Monday to Friday, excluding crypto and Forex. I know. You know, crypto goes all day, honey, and honey, she is just dropping, girl. Longer-term traders would do better with higher periods, like 25. So after we have your parameter picked out, you're gonna add up your average gains and divide that by the average losses during your chosen time period. So just looking at this little chart right here, I have, now this is old school method, honey. I'm not doing this. The computer generates all of this for us. So you see here, you have your days, okay? So you have days here, and then it gives you the stock's closing price and what did it change during that day. So on this day, was it a gain or was it a loss? And so they averaged out all of these, your average gains, average losses. That's going to give you your relative strength. And over a 14-day period, that's what gives it the index. So all in all, that's all it is, honey. I didn't want to get too much into it, honey. But with that being said, how do we actually use the RSI indicator? Traditionally, new traders learn a way to interpret the RSI by viewing the price as either overbought and due for a correction when the indicator is above 70, and they see the price as oversold and due for a bounce back upwards, honey, bounce back. They're waiting for it to bounce back up, and this is when the indicator is below 30. This is the old school method, honey, and this was originally observed and introduced to us in 1978 by Mr. Wallace Wilder, honey. Yes, I'm doing too much. According to Mr. Wilder's findings, in a strong market uptrend, the price will often reach 70 and above for long periods of time. And for downtrends, the price can stay at 30 or below for a long time also. So in a strong uptrend, the general idea of overbought and oversold levels are based on supply and demand. And they can be right a lot of the time, but they may not give the most precise signals to invest with. And I've said in earlier videos that it is an outdated method. It is old, it is outdated. I tried this back in 1978, honey, I wasn't even here. Outdated method, and there's a better tweak that you can do to the RSI depending on the overall stock trend. And this comes from the famous technical analysis, Miss Constance Brown, honey. Yes, back in 2012. So while they were talking about the end of the world, honey, Miss Brown was over here writing books, honey, changing all of our lives. Constance. The RSI performs better when you alter the overbought and oversold zones. Oversold zones that we've all used for so long. So this is what I've always preached to you. The trend is your friend. Find the stock trend. That's the first thing that we want to do, is find the trend. This is going to be a little bit different. In a bull market, the RSI ranges for overbought zones, we're going to change those from 70 to 80 to 90. So it's going to be a range between 80 to 90 for overbought, and for oversold zones, or the support area, it's going to be from 40 to 50. So this is in an uptrend. In a bear market, the RSI ranges are going to be oversold at around 20 to 30, and the overbought zone or resistance is going to be 55 to 65. So let's see how these changes affect our trading signals. Okay, so this is what we're going to do. All right, so right now we are in Thinkorswim, and this, as you see here, this has all of my old settings on here. So I'm going to remove all of this, and let's just put the RSI back on here. This is our regular RSI setting. So this is 14. You're going to have your overbought at 70 and oversold at 30. And it says Wilder's. Great. We just talked about him. Okay, so let's just put that on there, take all those off. So you see everything. You see the RSI here, 70 and 30. Okay, so this is Cleveland Cliffs. Hi, Miss Cleveland. How are you? This is clearly an uptrending stocks making higher highs and higher lows. Great. This is what the stock is giving us. This is uptrending, and we see periods here where the stock was a little bit low, and it hit this period here where it's, you know, overbought, and then it drops low. But as you see here, the stock is continuing to go upwards. So what's going on with that? So let's go ahead and let's change these parameters and see what that's going to do for us. So we're going to go up here. Now this is in Thinkorswim. You can do this in any platform, but I'm just going to use it at Thinkorswim because it's easier for me and the charts look great. So I'm going to change overbought to 80. Oversold, I'm going to move it up to 40. Okay, so as you see here, that definitely changed the look of what we had going on. So you see here, it's a little bit overbought here. I don't know, this is very low considering we have a lot more room to grow here. So what I like is at a low right here, this gives me a better signal. I would get in here and I would hold it until it actually really became overbought, and you can sell here or you can continue to hold on to it like I said. But I do like the signals that this is giving, because even just right here when it's at its lowest point right here, this would be a great time to get in. But before, if it was lower than that, then we would wait all the way back here, and then that still wouldn't have been the best time to get in, because you see it kind of went up and then it dropped a little bit lower, but it continued upwards. So this is just giving me a better buy signal. Another great trick, I think I'm going to talk more about this at the end of the video, but another thing that you'd want to do is don't just wait for it to actually reach that point. Wait for it to reach that point and bounce back from that. So I say that because you see how it did drop down here. What is this? This is back on the 1st. Okay, 1st of March. So it did drop low, came up again, dropped low, but it really didn't start to move until it really bounced off of that. So I would say set your buy-in area not as soon as it reaches the zone, but once it comes out of the zone, because that's showing you that it is changing trends. And so how about let's look at a downtrending stock. So yeah, right now Tesla is very much so in a downtrend. All right, so let's set it up for a bear market, which is what we're looking at. So for the bear market, we're going to change it a little bit. So for the overbought, I'm going to put it at 55. 30 to 20. And so this is going to be our downtrend. So you're going to change this for each of the trends, and you'll see here, we zoom in, you see here, this is where the price was at its high, at a low for that time, came up a little bit. So even on this bounce, let's see, just right here, see, look at that bounce up. This didn't even go up to the 55. On a downtrending stock, you're definitely going to want to bring your parameters in a little bit closer, because right here, this peak is at 51. Now, I think you really see it a lot more on this downtrending stock than on the uptrend, but you see here, it's not always going to go up to that 70. On a downtrending stock, it's not. You see it did it right here. 82 is pretty high. So even though the new overbought and oversold conditions are literally, they're game changing, that doesn't mean that everything that we know from the earlier methods get wiped out. So everything isn't a loss from that. Divergences are still something that you're going to want to watch for. So what is that? What's a divergence? Essentially, you're going to get divergences when the highs and lows of a stock price move in a different direction than the highs and lows of the RSI indicator. So you look down on the RSI and you can see, just like a stock chart, you're going to have higher highs for your RSI indicator and you'll have lower lows. So it's going to have trends too. And you're going to have a bull and a bear divergence. With a bullish divergence, the stock makes a lower low and the RSI is making a higher low. So the stock price is dropping, but the RSI is actually increasing. And on the opposite of that, with a bearish divergence, on the other hand, the stock is making higher highs and the RSI is making lower highs. So it's dropping and the stock is going up. Okay. So what this is telling us is that our momentum for this trend is weakening and we're probably going to have a change in direction. This is why the RSI can stay overbought and oversold for a long period of time when a stock has a lot of momentum in either trend direction. Divergences can help give traders a heads up when a bullish or bearish swing might reverse, but they can also let you know when a trend might continue. So it'll let you know when a trend is changing, but it'll also give you a little hint to let you know that this trend is actually probably going to continue for a while longer. And these are what we call the hidden divergences. So a hidden divergence, it's just lightly letting us know that the trend is going to continue. And you're only going to use the signal if the hidden divergence is a part of the dominant overall trend. And so if you're looking at a stock price, I say dominant trend, I say is going to be at least 1 month worth of price movement. So 1 month time frame, that's going to give you a dominant trend, 1 to 3 months. So, and the last thing that I want to say is keep an eye on the center line. All oscillators like the RSI, the stochastic, and the MACD indicators, they're going to have a center line. But just know that the RSI center line is going to represent a value of 50. So a lot of traders use the center line to help indicate if there's going to be a change in the trend. So if the RSI is above 50, then the momentum is considered to be up and traders can look for opportunities to buy in that market. However, a drop below 50 would indicate a new trend is developing. And if it drops below the 50, then that could be an indication that a bearish trend is starting to develop here, as you see when it dropped below that 50 line there. So that's just an example. That center line kind of acted as a support for us right here. It broke through there and you see a change in the trend. So when the momentum shifted, the RSI is going to drop below the 50, signaling a bearish reversal. So knowing this, you would know when would be a good time to exit a long position or just look for different entries when it starts to change into a new direction. Okay, so yeah, that's pretty much all I have to say about the RSI indicator. There's a lot that you can do with it. It's a great indicator to use, but of course it's best used when you match it with trend lines, MACD indicator, and your moving averages. That's where you're going to get the best information from your relative strength index. Okay, I hope that this video was helpful. If anybody is interested in using the RSI indicator, make sure you change it depending on what overall trend your stock is in. Please make sure you click that thumbs up button for your girl. It really helps the channel. Also, make sure that you subscribe, click that notification bell so that you get notified anytime I upload a new video for you guys. Thank you guys so much. I'll catch you on the next video. And all right.